G'day and welcome to the weekly VEMA Trader Bitcoin market scan. My name is Rhys, and in today's video I'm going to run you through the trade that we set up last week and we'll take a look at how that played out. Then we'll go and take a look at Bitcoin as it stands today. We'll see if there's any trades that we like the look of, and if there is, I'll set those trades up. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so here we are looking at the dashboard, and unfortunately it is not a good looking dashboard after last week. We took two losses, did manage to move the stop on one of them, so we will start with that trade. This trade actually hurt me quite a bit. I was not stoked with this one. What we were doing, we were looking for the long from Bravo, and we were longing up to roughly Delta. That worked out really nicely. We got stopped out before the move played out, so that did suck a bit. Now, I did move the stop loss up. It wouldn't have saved us. Price peers to where the original stop loss was, so at least the good thing here is by moving the stop loss, I took less of a loss. But it always hurts quite a bit when you see your trade just get stopped out and then go and do what you want it to do. So the tag that I have here is stop loss too tight on zone. Now the good thing is that's the first time that we have had that, right? So I still tag it, but if say we get to 100 trades with this system and that's only tagged once, then I'm probably pretty happy with where my stop loss is. But if I start seeing that consistently, then I know that I need to give them a little bit more room on the other side of that zone. So that was that trade. Righto, so the other loss that we took was the short from Delta. We're looking at sort of this 4 hour zone, that 4 hour EQ, probably even a fib level by the time we did get down here. I don't really have anything to tag on this because VEMA will have taken care of all the automatic tags for me. Like it was a bounce, it was a short, it was this and that. Those are really things that I want to keep track of. There's nothing specifically that I would look at this and go, okay, I could have done this better, I could have done that better, apart from it being a failed trade. So that's really it for this trade. And then the other two trades that we had, one has closed because we put an expiry date on it. That expiry date was hit, so that is quite easy to mark as reviewed. And finally, we have one that is still monitoring. The one that is still monitoring was our long from Charlie. I think this was what hurt me the most about getting stopped out on Bravo, was that it was such a close stop and not enough to hit Charlie. It's just that real in between where the first trade lost and the second never entered. So those are the breaks. I'm going to cancel that now because if price was to get back down there, I wouldn't really want to be getting into that long. And if I do want to get into it, depending on what's happening when we get down there, I'll reset that trade up. So I'm going to cancel that, and that is last week's trades. We'll go and take a look at Bitcoin as it stands today. Alright, so today is the 1st of August, so we actually had a candle close, a monthly candle close happen about 6 hours ago. So, taking a look at that, there is not much to report. The candle is, slightly bullish. It definitely closed higher than it opened, but it's not much of a recovery. If you look at the month before, that was an enormous bearish engulfing. This is, we've recovered, say, half, more like a third of the price of the move down, essentially. And that's not even the entire move down, that's just that 1 month of June. Cool thing to note was how perfectly June did bounce off the 0.786 fib. It's always pretty impressive to see how accurate fibs are. And then in terms of supply, I'm looking at about 43,000, and for demand, about 12,000. So that's really it for the monthlies. We're a long way from either of those zones. Not a ton I'm seeing on the monthlies. And now we come down to the weekly. So on the weeklies, we had a sort of a doji last week, bit of indecision, where price moved up, price moved down, price closed roughly where it opened. A little bit more bullish than anything, but for the most part, I see that and I just think indecision. In terms of levels, nothing's really changed. We're still looking at that sort of 18,500 demand. There is still that 29,000 supply that does line up with that 38 fib. There's also that 4 hour EQ that runs through the middle at about 31,000. The one interesting thing to note is this trend line. So I drew this on today. I haven't really been looking at trend lines on the weekly. And then I thought actually there was quite significant pivots there and there. So you can draw a trend line on those. Now I am on the log chart currently. I do like to use the log chart for higher time frames because Bitcoin has had such parabolic moves. The log chart just allows you to visualize a lot of data, a lot of the historical data that you wouldn't see cleanly if you were on a standard chart. So I use a log chart to draw this. What that means is that if you take it off log, that trend line will look ridiculous. But that is how I like to draw them. So you might see it a little bit differently if you draw it not on the log chart. So for me, still when I look at the weekly, I kind of think, okay, makes sense for price to come up here and then, come up here and then make a decision, right? The next step on the weekly that makes sense to me is up there. Doesn't mean we're not going down, as I say every week, but that's kind of I always like to get that picture of what I think's happening, and that is what I think when I'm on the weekly. On the dailies, we are still in what, in my opinion, is a bear flag. May not be. The thing with a bear flag is you don't know for certain it was a bear flag until it either plays out or proves itself to not be a bear flag. So what I mean by that is it's only confirmed to be a bear flag when it breaks down, or you could still confirm it as a bear flag but a failed bear flag if it breaks the 61.8 fib and continues to head up. Because not every bear flag will play out. So, you don't want to look at them in hindsight and declare it not a bear flag whenever it fails. I mean, you can. It just depends how you want to phrase things. It doesn't really matter. Kind of a linguistics exercise, so we won't get bogged down in that. So, what I am seeing on the daily that is actually, worth talking about is this. A little bit of bearish divergence that you can see there. So, when I look at this on the daily, I start to think what is most likely is price coming sort of down here before it makes its next decision. Why I think that is that bearish divergence doesn't actually play that much of a role. So one thing that I haven't really seen anyone talk about is you don't actually need oscillators to see divergence. I won't get into it because it's basically a video on its own, but when I look at this alone, just price action, I start to go, okay, this just feels like it's topping out. Like it feels like buyers are getting weaker. You can see we had a pretty big move up, decent move down, and then a pretty small move up. It's, if I had to do the maths, probably about half the size of this one. So that combined with the fact that we had not necessarily a morning star, but kind of the same sentiment as a morning star, right? An evening star, sorry. We had a bullish engulfing here. Then we had indecision. And then we had, what most people would probably call indecision, but to me, that's actually a really solid bear hammer. And then we've had, same thing again, a bear hammer that's also a bearish engulfing. I kind of look at that as, even if it's not an evening star to the exact, description of an evening star, it kind of has the same reasoning behind it. What I mean by that is it's essentially showing the same thing, right? We had a lot of buying pressure. Then we had some indecision. Now we're seeing a lot of selling pressure. So that is what an evening star actually tells you, right? And that's kind of what we're seeing at the moment, even if we're not seeing an evening star as, the exact definition of an evening star. So all of that combines to make me think that, we're at the top of the bear flag. We've seen a higher high, but it's quite a weak higher high. And, as I say every week lately, we have had a huge move down for the last 9 months or so. So, all those things just factor into me being quite bearish a lot of the time. And so that is kind of what I see as the next logical move on the dailies. And finally, we come to the 4 hour. So on the 4 hour, what I am really looking at is sort of 23,700. It was a really solid support level once we broke above it, right? It held for a long time, and then it was also resistance when we were here previously. And if you go back quite a long way, right, to the run up to like 65k, it was actually a pretty significant level. I think it was slightly higher, somewhere around there. But, it's been historically an EQ in that region for quite some time. Let's just call it, 23,800 or so. So, that's exciting. We're getting some movement. So, there is a demand zone that you could draw in through here. The only reason I don't draw it in is I find it really ugly, right? It's really big, it's really wide. I don't like when it's a big wick like this. How do I explain that? Kind of through the zone, right? So typically, what I like is a candle followed by an engulfing. And I like that candle for my zone. Here, we have the candle, we have the engulfing, but the wick of the engulfing candle goes completely through that first candle, right? Doesn't mean it's not a valid zone. You will often see me include a wick like this, but just because of the size of this wick compared to, the candle before it, not a zone that I really want to use as a zone, essentially, is what I'm trying to say there. So I do think the EQ at about 22,000 is quite solid. 22,600 is what I've got there. But that zone, wouldn't surprise me to see price bounce from basically where we are right now, sort of 23,000. But I'm not going to mark that zoning because I'm not going to use it for my trading. Now, the one trade that I actually do sort of see here is a short from this level, right? Based on what I'm seeing on the daily, where I kind of think price might be coming down to here, that makes me go, okay, I want to get into a short, right? I want to, if I believe price is coming down here, I want to catch that move. Now, why don't I just short right now? Well, because it's not a good time to short, in my opinion. This is a video I've covered on my personal YouTube channel, where I talk about minimum risk, maximum opportunity trading. And right now, I just don't see as a minimum risk entry. Because price has already moved down a bit of a way, if I wanted to have my stop above previous structure, something like this, then I'd only really be getting a 1.6 to 1 trade. If I'm patient and I'm willing to wait for price to get back up there, knowing that it may never get back up there, then I get a 4.1 to 1 trade. So that's just how I like to trade things, and that is why I don't really want to be going short, just based on where price is right now. So I'll set that trade up and then I'll get back to you guys. All right, so the setup we have for this trade is my pretty standard. Short, bounce, no distance to activate, no distance to confirm. The one thing that I will add is an expiry date, because that trade that got stopped out last week, I did sort of only want it to happen if it happened quickly, and it didn't happen that way. An expiry date could have saved me on that trade. So I reckon somewhere around there. Let's have a think. Yeah, somewhere around there. Basically, I want to enter this trade if we come up now and then head down, or if we come down, test this level, then come up. If we really sort of get down here and then start coming back up, I don't want to be getting into this trade. If we sit, consolidating in a range like that for a while, I don't want to be getting into that trade. So, expiry date about the 5th of August, so roughly 1 week away. Risk management, 1%, because it is with my high time frame bias, because I am, bearish on the markets, because I do believe we're in a bear flag. So 1% risk for my short, and just a standard fixed value stop loss. I haven't given this more room. We did just get wicked out very slightly on that trade last week, but it's a one-off at the moment. And you don't really want to go start changing your trade plan based on one piece of data. You sort of need to get at least 20 trades, I think is what he recommends in trading in the zone. So you need to get at least 20 trades and get that data before you do start making changes to your trade plan. So things are going to stay the same for my take profit, for my stop loss. My take profit, I'm going to target that daily EQ. I kind of do want to target the demand zone just to get that better risk to reward. But, that's just getting greedy. That's a 4.4. I think it's about a 3.9 if I have it here. So, there is always the chance that the zone does get front run. The EQ, it just bounces off. I would rather take profit early and lock it in than not take profit and watch my profits evaporate. So, targeting about 21,600. And in terms of the journal, I am happy. I've gone confidence down to about a 4. Just taking those 2 losses last week. We're at 3 losses in a row. That doesn't really faze me. 3 losses in a row. But it doesn't, I'd be lying if I said, it doesn't not faze me at all. That was an awful sentence. I don't like taking losses, and I especially don't like taking losses publicly. I hate being wrong publicly, but that is part of trading, or part of what I do with my trading at least. So, just have to do it. Has knocked my confidence a little bit, and I'm also sick, which will often sort of mess with me. Nothing's really wrong, just a little bit of a cold that I'm having trouble shaking. So confidence on this one is only about a 4. That is also partly to do with the 4-hour market structure is bullish, and I'm going short. So one of the things I have tagged is mixed bias. So, there is a few reasons that my confidence is down to a 4. Beauty of the confidence slider is it just factors a bunch of those things in, really quickly. In terms of tags, just got that, supply zone, we've got the EQ, bearish daily bias, and it's with my high time frame bias, and that mixed bias, because it is mixed, it is a daily bearish bias, a 4-hour bullish bias. So that is something that I always like to tag and just, see whether that is something that plays into things. So that's really it for me from this week. That is the trade setup for this week that I am interested in, or certainly as of today. That's the only trade setup that I'm interested in. Things might change during the week. So hopefully you guys are having a great time. Hopefully your dashboard is looking better than mine. Look, it's still profitable, so can't complain too much. But yeah, a little bit of red towards the end there. So hopefully we can start next week with a big green candle. Have a great day, happy trading, and I will talk to you very soon.